risen on the India-US trade optimism. In fact, the Nifty's crossed 26,000 for the first time in 2025. We have Devang Mehta, who's the Deputy MD and CIO Equity NDPMS Spark Private Wealth Management, who's joining in now to discuss the markets with us. Devang, hi, welcome to the show. Well, I don't know where to start. Should we start by talking about consumption? Should we start by talking about the India-US trade deal? Just give us a sense in terms of, where you are at, say, when it comes to specific stocks within the consumption space, considering that we've just left behind the festive season and it's been fairly good. Give us a sense in terms of what you're making of it.
Thanks, Ekta, for having me on the show. Belated Diwali and prosperous New Year wishes to you and the entire team and all the viewers. The fireworks continue. So I think that's what we can call the market right now. What we are seeing the last 5-6 days, and I think it's a pent-up demand of sort of buying businesses on the back of a great, I think, festive spirit in terms of what we have seen. I think very clearly, I would go down to micro sectors and sectors, but wouldn't talk stocks as recommendations, but I'll give a lot of examples. Very clearly, Ekta, what we have seen is the last 15-20 days, I think post 22nd September, when the GST, sort of the new GST transformation set in, we have seen a flurry of demand, right from two-wheelers, right from four-wheelers, and I would not like to repeat what we have read in the last 2-3 days, right? Around 6 lakh crores of sales is what we thought about, and around 70,000 crores of services, and around 5.5 lakh crores of goods. Yes, this also will have the small traders, but finally, if the small traders and even the unorganized sectors of the economy do well, I think this all will come towards more of consumption and more of Capex and more of financialization. So my sense that this looks structural. What government has done over the last 1 year, last budget, yes, they left something in the hands of consumer. Second, I think what has happened to inflation, what has happened to interest rates, historically lower sort of inflation we are seeing at a 100-month low. That also encourages a lot of people where interest rates are now moving downwards to spend more. And third, yes, of course, the GST rationalization. And this seems very, very structural. Yes, and the festival sales, we have seen a super buoyant demand across categories, right from non-discretionary to even discretionary consumption and even the luxury items. But my sense that if the India-US trade deal, which has been an overhang since a long time, if that materializes, I think we have also seen the return of FIIs. If I am not making a very exaggerated point, but last 4-5 days we have seen a bit of a good behavior from their side as well. So I think all this confluence of factors, the macros, some bit of micros, I think earnings would also start coming back in the next quarter, if not in this quarter. My sense that we have more things to cheer, more positives than negatives, and more sort of reward rather than risk.
Okay, more sort of rewards rather than risks, and FII, surely at least some bit of a buying. Seems like, the sell that was going on for a while, that seems to be a story that's now changing. Devang, good afternoon. This is Vinny joining in the conversation as well. I just want to understand in terms of, you spoke about the auto sector, right? The PV. That's where we saw good sales, festive season sales. SUVs were the ones which were doing well, last through the years or last couple of years is what we could say. But are these small car sales, has that seen an improvement? What is your understanding? And obviously then, does that merit those companies doing much better?
What I have seen, and I've been always making this point since last couple of years, that how India has transformed itself. What used to be a luxury earlier has now become necessity, and that is what premiumization is all about. The sense one gets here is that Maruti was on record last couple of years talking about selling more SUVs, the more Vitara Brezzas of the world, rather than more of your entry-level Altos and stuff. But I think what the GST rationalization has also done, and this happens more in tier 2, tier 3 cities and even smaller towns and even rural India, which has probably also seen prosperity because of decent monsoon, because of decent farm income growth. My sense is that across the strata of the curve, from necessity to luxury, there has been sales across. What I read, and of course, these numbers will reflect in the quarterly numbers in the next quarter, but whatever you read from FADA or from the vehicles, from the dealers, is that yes, this time the demand has been uniform. It's been across, right from hatchback to even sedans. SUVs, of course, have not benefited much because of the GST, but there also the demand has been very resilient. So as I said, it's a combination of factors. It's not only GST, but also I think India has seen a tremendous tremendous spirit in terms of festive demand, the pent-up demand, whatever you say. The last 6-8 months, the last 2 years have not been great for automobile sector. So particularly PVs and also some bit of two-wheeler demand is where we are seeing a lot of traction. And I think this seems like it can probably stay for the next 1 year, 2 years. I'm not talking 5 years, but the next 1 or 2 years, I think this probably demand. It will not be as exaggerated as what it is during the festival season, but probably it seems like a structural story coming back to the fore.
Okay, all right. Devang, wanted your sense in terms of what's taking place with the entire IT sector now. Would you be a buyer in a couple of these stocks with regards to Infosys? Infosys has, the buyback news, but separately, a lot of these IT stocks seem to be in favor because of the H1B clarifications which have come through.
I think the only problem here is that the sector is now in news for a variety of reasons. One, most of these companies, typically the large cap IT companies, were just, I think, few days back at 52-week lows. Yes, there has been a lot of narrative around what President Trump does a tweet about this type of companies. Yes, the H1B row, the numbers probably growing at single digits, mid-single digits. Most of these companies don't have the wherewithal to probably grow in double digits for a long, long time to come. Yes, things can change. Most of these companies are also getting to the digitization wave or are also investing in other streams or AI, if I could put it that way. That would potentially take some time. My sense that somebody who probably wants that 10-12% type of returns, the FD plus type of returns, this sector seems a little more undervalued, if I can use that word. But somebody who is growth centric or wants a sort of 14, 15, 18% type of returns CAGR over the next 3-5 years, I don't think that this sector has the sort of tailwind for a CAGR type of return for the next 3-5 years. Yes, it can be a decent trading bet for the next 6 months, 1 year. But as I said, we sort of are completely underweight or we don't have this type of businesses in the portfolio, which have a lot of global dependence and is more led by news flow rather than concrete fundamentals.
Mm-hmm. Devang, what about the Capex story, right? That was doing well in the last year. Now, given that consumption is also going to be coming back, given that there are so many measures that are already taken, do you still think the Capex story remains intact in terms of manufacturing, engineering, power, or only one specific part of this maybe would be doing better?
I think my sense tells me that probably India runs on 3 wheels, and I've been making this point. One has always been consumption, which took a setback over the last 4-5 years. Capex was one thing which came out. I think it had a huge hibernation period for a long, long time. But then somehow Capex came back and you saw power, engineering, manufacturing, right, capital goods, ancillaries, all such type of industries doing very well. And now consumption as well as a bit of credit growth is also seen. Right now, I think if consumption goes up, credit growth will also go up. And your bank balance sheets are clean, are robust. Your corporate balance sheets are also sort of cleaned up. My sense that this gives them an extra sort of a legroom to now expand. So I'm again talking about private capex, which has been long not coming. Government capex has been steady, and I think they will not stop it. If government capex and private capex both come in, my sense that you can't rule out that this capex-oriented companies will do well. My sense that most of these companies related to engineering, capital goods, infra have taken a breather. The last 2-3 months, yes, your companies related to financials, your companies related to consumption has come back. But I probably it will be a risk to ignore these sectors. And my sense that they've cooled off a little bit in terms of valuation also. Also from here on, execution speed up and new orders would start flowing. If the overall economic shape and size improves from here on, I think the biggest beneficiaries would be capex-related stocks. So my sense, you can have 3 parts in the portfolio. One is capex-related, the second is consumption-oriented, and third is financials along with credit growth-oriented.
Okay, all right, Devang, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the view coming in from Devang Mehta on the markets. Just want to point out that there were some statements which came in from HUL where the management has indicated, yes, volume-led growth is what they're going to be focusing on, but the target margin range is between 23 to 24%. That's what the management is indicating at this point in time. We'll take a short break, but up next, we'll connect with Bhavin Shah, who's the founder, CIO and CEO of Sameeksha Capital, as there are clarifications with regards to the H1B visa, which has really boosted IT stocks today. Stay tuned for that.